Hey everyone, me Kevin here. Wow, I have so much exciting information to share with you about whether or not Nio is a buy or it's a sell and everything in between. We're going to talk about what happens on Nio Day or what's expected to happen on Nio Day. We're going to talk about the BaaS service model. We're going to talk about margins and competition, and then we're going to talk about valuations and price targets. Is this a buy? Is this a sell? Is this something you want to just hold forever, folks? Let's get into this. This is going to be super exciting. First up, Nio Day. Right after I mentioned that you should get 4 free stocks with Webull. If you haven't yet, deposit $100. They give you 4 free stocks. You could do it before the video is over. You may as well do it. All right, Nio Day. Nio Day is January 9th. Think of this as kind of like a cross between an Apple iPhone launch event and the Cybertruck reveal. And that's because Nio is expected to announce not only new products and services with their company, but the ET7. The ET7 is, no, not a pickup truck, but it is a sedan, and it is the first sedan that Nio will be selling. They first teased this back in 2019, saying it'll come out then, and then they teased it in 2020, and now it's delayed until 2021, but this year it's officially supposed to be announced on Nio Day, and they're already teasing it. If you go to nio.com, you'll see it. Right now, Nio only sells 3 SUVs and crossovers. They've got a sports car as well, but that one doesn't really count because they barely sell it. The SUV and crossover market, especially that more luxury space, is where Nio has been dominating. They are crushing it in this space. Small sedan, though, is a market they haven't entered into yet. And this ET7, their sedan, is expected to double Nio's total addressable market, and the amount of vehicles that they can sell could go through the roof with an ET7 by finally competing against Tesla's Model 3. See, not only is Nio's ET7 going to compete with the Model 3, but it's also going to compete with XPeng's P7, which XPeng's kind of got a little bit of a head start here on Nio. They've already sold more than 6,500 of these vehicles. Tesla's Model 3 is already obviously crushing it. Tesla is the largest pure electric vehicle play in China after all. But Tesla's currently taking pre-orders for their Model Y, which enters into Nio's SUV crossover space. So this is the perfect timing for Nio to give people looking for a sedan, especially a battery electric vehicle, another option. Now, remember, Nio's executives don't actually think Tesla's the massive competition. In fact, they don't see Tesla as like robbing their market share. They actually think the more people buy Teslas, the more people are not buying gas-powered vehicles, and the more that helps Nio actually grow their market share. They've got a really optimistic outlook here. And Nio also plans to release a second sedan in 2022. By then, they feel they'll be built out. They'll have 2 sedans and 3 SUVs and crossovers, and they'll be happy just getting to scale with those 5 cars. That's at least what they said on their last earnings call. Hey, quick interjection, by the way. If you like the videos that I put together, consider checking out the amazing courses on building your wealth. I talk stocks, the psychology of buying stocks, my strategies. I try to do whatever I can to teach you about fundamental analysis, how I put these kind of videos together. I also teach you how to buy real estate below market value so you can really build your wealth really quickly. And then when you build your wealth quickly, you can invest more money into the stock market. Anyway, use that coupon code link down below. It does expire January 8th, and there are bundle options listed on the page when you go there. So you'll see the courses and the bundle options linked down below. You get a great price if you bundle up. And the sports car, again, I kind of think that's kind of like the Tesla Roadster. Like, it's cool, but it's not for the mass market. And right now, both of these companies are like, get me to mass market. And Nio Day is going to be big in terms of the ET7. We really want to stack up those specs and the pricing to the Tesla Model 3. So we're excited to see what happens here. But next up that's expected at Nio Day, Nio Platform 2.0. And this is the Nio Pilot platform, their autopilot platform. And we're expecting to hear a lot more about potentially new chipsets that are advanced enough to handle future robotaxi networks in China. That's huge. We want to know that Nio's going to be competing with Tesla in the robotaxi space, unless, of course, you're only a Tesla bull, which I am very much a Tesla bull, but I own both of these companies. I definitely own shares in both of these. But I'll talk to you about some changes towards the end of this video regarding Nio especially. But anyway, Nio Pilot right now is based on Intel's Mobileye EQ4. At some point, Nio Pilot, or Nio, is expected to build their own sort of from the ground up autopilot software, kind of like Tesla did. Tesla also used to use Mobileye back in like 2016. But right now, Nio Pilot's already pretty good. It can overtake slow cars on highways. It can take you from ramp to ramp on a highway. It's very similar to Tesla's autopilot system. Next, we're expecting to hear about a potential used car policy at Nio. So we got a few announcements coming here at Nio Day. And these are expectations, of course, so we'll see what reality ends up being. But Nio's used car policy sounds like it could potentially be a whole lot like Tesla's guarantee that they had at first. When Tesla started selling their vehicles, people were potentially afraid of rapid depreciation with battery electric vehicles. So Tesla's like, oh, don't worry, we'll guarantee we'll buy your car back in 3 years at this price. Nio might be trying to do something like this, so we'll see. Next, we could also expect more battery upgrades at Nio. Nio is really notable for their battery swapping technology. Now, in case you're not familiar with this, Tesla tried this, but found out that Americans didn't like it, or at least that's what Elon said. But in China, Nio believes that people love to have a car that they can drive into a station and in as little as 3 minutes, they get a brand new battery that's fully charged popped in, so it actually takes less time than it takes to fill up your car with gas to swap your battery and just get a new battery popped in. On August 20th, Nio launched its subscription battery as a service model, and it is amazing. Now, it shouldn't be confused with a software as a service, because it still has parts and batteries and things that decay, right? But this model is so amazing because it basically lets you buy the car for about 10 to 18% less than what the car would sell for with the battery. So this is a way that Nio is actually driving price competitiveness against Tesla by selling their car without the battery. Now, obviously you need a battery to drive, but instead of selling you the battery, they just rent it to you. Somewhere around $162 a month, and boom, you got the battery as a service setup. Now, obviously, it depends on the size of battery you get, but at Nio Day, we're expecting to hear a few more announcements. We're expecting to hear Nio and a potential deal with the State Grid New Energy Vehicle Corporation. Apparently, or at least they'll talk about this more, apparently they're planning to, in detail, announce 100 new battery charging and swapping stations that'll be built in 2021. So there's a big cooperation to get more charging infrastructure and swapping infrastructure in China. This is kind of what we're expecting Biden to do in America as well, like a lot more EV infrastructure. We'll see. But this setup, really this BaaS setup is so awesome because think about it. Instead of buying a car for like $52,000 like their SUVs, you could just pay $39,000 for the car and then pay $162 a month. It's that simple. And the beautiful thing about their swapping system is they're also expected to announce a new battery, a 150 kilowatt hour, which could literally destroy Tesla's current ranges. See, Tesla's current battery packs are like 75 to 100 kilowatt hour packs, which are what the Nio packs are as well. But a 150 kilowatt pack could literally mean taking what used to be a 300 mile range vehicle and turning it into a 600 mile range vehicle. And the cool thing is, if you already own a Nio, you could just upgrade to that 150 kilowatt hour pack, which is like personally, I got the Tesla Model X. I got a 75 kilowatt hour pack. And then when I charge it up, it's like, yeah, you got 240 miles. And we all know that with EV, you may as well take like 20% off. So great. I got like 200 miles. The problem is I do a round trip to LA and back. I usually have to stop the charge, even if I'm fully charged up, especially if I've left the car parked for a couple days at the airport. If I could swap to a bigger battery, oh my gosh, I wouldn't have to buy a new car when I wanted longer range or stop as much to charge, right? It's a very smart, effective way of not only reducing the barriers to entry for people to get into Nio's system, but it's also a great way for their users to have the benefit of flexibility to rent the battery that they need. You're gonna go travel, get the 150 watt, kilowatt hour pack. Yeah, not traveling, just doing daily, back and forth commuting between your house and office, get the 75 watt pack, whatever you want, it's your choice. We also, by the way, might hear that Nio might be integrating Lidar on Nio Day into their new Nio Pilot system, which this is going to be a huge deviation from Tesla. I'm not sure if we're going to see this Lidar integration. Could be big for Lidar stock. Stay tuned. I know Microvision's up today. I'm not sure why. But anyway, so far, Tesla refuses to integrate Lidar with their vehicles. Now, Nio integrating Lidar could potentially help Nio beat Tesla to robotaxis. Unless, of course, Tesla gets their act together sooner. Now, Tesla is currently testing Lidar on some of its vehicles. They're using the Luminar system, but rumor has it Tesla is just temporarily using this technology to cheat. Well, I shouldn't really say cheat. I talked about that in another video. But basically to teach their algorithm that they can then export to all cars rather than install Lidar in each car. So basically, they buy, 10 to 100 Lidar systems, and they use that to teach all the Tesla cars that exist how to operate self-driving better. Nio, on the other hand, wants to potentially integrate Lidar into every single car. Big difference. This is also what Waymo uses for their fully self-driving fleet in Arizona. Keep that in mind. Now, there's also this rumor about possibly Apple partnering with Nio and then Apple buying some Lidar technology companies, but really, this is a bonus. It's not a reason to buy Nio. If it happens, whatever, it'll be great for Nio, but if it doesn't matter. Nio doesn't need Apple, honestly, right now. If anything, Apple needs Nio because, well, I don't know that because we don't really know much about Apple's self-driving car, but it's a story for a different day anyway. So, okay, that's a Nio day, okay? That's just part of this video. Now, let's talk about competition between Nio, Tesla, then we gotta get to margin and valuation and price targets. It's gonna be fun. So, at least I'm having fun with it. So, Tesla's made in China Model Y costs like $56,600 for the performance model and $52K for the standard model. Nio's EC6 crossover costs around $56,300. So, Tesla's purposely trying to undercut a little bit here, or be close at least, right? BMW and Daimler Mercedes are also expected to jump into this market in this competitive $50K range. So we're gonna get a lot of competition here. Xpeng's already there with their G3, which is cheaper, but it's also slower, which takes a little bit of the fun away of having a battery electric vehicle. Tesla's Model Y goes 0 to 60 in 5 seconds. Xpeng's G3 takes 9 seconds unless you get the Performance Edition, which brings you down to 5.3 seconds. But Tesla's Model Y performance is even faster. The same thing is true with Nio. Their EC6 has, ES6 has a 0 to 60 4.7 seconds. So Xpeng a little bit behind here on their entry models having decent performance. I'm not going to talk much about Xpeng in this one, but the bottom line here is that Tesla's Model Y and Nio, pretty good competitors. There's also Li Auto, which is priced slightly lower, but so far they've gotten less market share. But instead, here's what's important here about the competition. The more you get people going from Tesla to Nio, the more you start creating, and this could be a bold statement here, but I'm gonna go with it. The more you start creating this Apple versus Android ecosystem, where potentially the Li Auto becomes more like the Nokia or the third party, and then you've really got those two winners like the Apple and the Android, where it's you're really loyal to one or the other. Now, it's really too soon to tell if Nio is going to be, the next Android, so to speak, compared to Tesla being Apple, just say as an example. But right now, the indicators are in Nio's favor. They're going to be ramping strongly, and they've got some serious growth ahead of them. And there are a few reasons for this. First, their total addressable market share is exploding, but so is every electric vehicle maker's market share. But the other thing to keep in mind is something that's unique to Nio. So Nio... Deutsche Bank says that Nio could potentially be the next iconic auto brand, and the big reason they gave, a 64% referral rate. It's pretty huge. People who drive Nios refer their friends to Nio a lot, and this is actually up 12 percentage points from last year. They also have this, belief that Nio is so much substantially more favorable when people get into these Nio cars, because Nio focuses on that luxury feel. It's kind of like having a BMW or Mercedes, but having a cool, techie, new Tesla that's like a BMW or Mercedes. Tesla, I don't want to bag on Tesla here, but if you know Tesla and they've got some quality control issues and that Elon Musk's goal is to keep Tesla more of a mass market car, you kind of have to put Tesla over at more of the Honda Civic, Toyota Camry style, finish compared to where Nio's really trying to hit that BMW Mercedes market. Now we'll see. Obviously, Tesla's goals are to increase its customer satisfaction and its quality and all that. But so far, Nio's surpassing Tesla in terms of quality control and customer service. And they've got this pretty awesome battery as a service swapping technology and really service, which is amazing. All of this is helping, at least per Deutsche Bank, to believe that Nio's growth potential is huge. Right now, there are 700,000 SUVs that are sold annually in China, and Nio is only grabbing 4 to 5% of that right now. Mercedes sells 4 to 5 times what Nio does. But Deutsche Bank thinks that could very soon change. Now, Obviously, we know that Tesla is the big winner right now. Tesla sells like 2.5 times as many vehicles as Nio does in China. You really got to combine like Xpeng, Li Auto, and Nio to start getting close to Tesla. So Tesla's dominant here. We cannot bag on Tesla because Tesla's my biggest position. Tesla's going to remain my biggest position. I love Tesla, but again, Tesla's customer service, quality control, customer experience, it's not uncommon to hear of people switching from Tesla to Nio and loving the change, like the improvement, you know? It's almost like is Tesla your gateway in and then you upgrade? I don't know. I don't want to go as far as saying that because I do believe Tesla's quality control will get better in the future. But right now, Nio's got an edge on Tesla here. And again, Tesla can fix these things. But right now, Nio's biggest play, we got to focus on this, is beyond some of these benefits, the referrals, the quality control, the customer service, the Nio stores they do with the coffee and the culture and all that. That's great. But the big thing that's really helping Nio push their margins, or that will help Nio push their margins here in the future, battery as a service. And this is where we're going to start talking about margins. So we talked a bit about the competition. We talked about Nio Day. Let's get into margins. Right now, Nio's sitting around a 14.5% margin. And with Nio's battery as a service technology, it's very likely, at least according to Bloomberg Intelligence, that they could get their margin up to 18% this year. Tesla sits around 22.4%, not including energy credits. And that's actually important because Nio doesn't account for their energy credits with their margin here. So I'm comparing apples to apples now. Nio's trying to get to 18%. Tesla's around like 22.4, 23-ish%. Now, Nio does not, and this gets entertaining here. Nio doesn't actually own all their battery as a service assets outright. So this means they don't manufacture their own batteries. But neither does Tesla, and this is the interesting part. Nio's actually partnered with a company called Contemporary Amperex Technology. This is, I think their ticker is CATL. Anyway, they're the biggest battery producer in China. And Nio uses them to leverage CATL's technology and also to get to scale with existing batteries as soon as possible so they can start cranking a profit and get these vehicles out there. It's all about ramping as soon as possible with these vehicles, because if you try to perfect up front, you end up like a Fisker and you end up with nothing in production and nothing to sell. It's not so great. Not to bag on Fisker here. Eventually they'll be okay. But anyway, what's so interesting is it's very common and easy to slam Nio for not being vertically integrated like Tesla. And this is a fair argument because Tesla's trying to be fully vertically integrated. I mean, they make the machines that make the machines and they're all in Tesla factories, right? Nio uses a third-party manufacturing company to put their vehicles together. But folks, get this, CATL, the battery company, is a company that happens to also manufacture the batteries for Mercedes, Honda, Hyundai, and wait for it, Tesla. Tesla's made in China Model 3 uses the same cheaper Chinese batteries that Nio uses. And these help keep battery costs down about 10% for Tesla, but Nio also gets the same benefits. So even though we know like, oh, well, Tesla's making their own batteries, right? Yeah, sure, eventually. But right now, Tesla, just like Nio, they're using the same company to make these lithium iron phosphate batteries. This is a type of lithium-ion battery that's technically cobalt-free. It is. It's cobalt-free. And you don't usually want cobalt because there's some humanitarian implications here and it's expensive. In America, Tesla still uses the lithium cobalt and I think it's aluminum batteries. But anyway, Tesla does plan to go cobalt-free in the future. They want to vertically integrate in the future, but they're not at scale. So Tesla's just doing the same thing that Nio's doing. So when we slam Nio for not being vertically integrated, in fairness, we have to look at Tesla too and say, well, Tesla, y'all using the same batteries in China too. And it's interesting. It's interesting to see them all kind of play in the same space. But anyway, partnering, Nio partnering with these other companies totally makes sense, right? Minimize losses, get to scale faster, get the product out there, get more people reviewing the vehicle, get more people loving the battery as a service technology, and get to scale faster, especially with that referral rate. It's great for Nio. Keeps their marketing costs very, very low, kind of like Tesla. It's kind of that viral phenomenon. Anyway, This helps Nio spend more money on research and development with the leftover cash they have. In fact, when they just did an offering and they raised billions of dollars, and people are like, oh my gosh, Nio's diluting their shares, which Tesla did too. Tesla raised $5 billion. Nio also raised billions of dollars. Nio took about 60% of that money and threw it into research and development into autonomous vehicles, took about 30% of that and threw it into research and development into the actual vehicles, and the leftover 10% they're using for their company. They didn't even really need the cash, but Nio's doing it to try to keep innovating and stay ahead of the curve. All right, now let's talk a little bit about deliveries. So both Nio and Tesla crushed it in terms of deliveries. Nio delivered about 7,007 vehicles in December, way up from their celebratory month in just November of 5,000 vehicles delivered. That's when they delivered 5,291 cars, and now they're over 7,000. Year over year, they're up over double in terms of deliveries. But here's something special that isn't really being talked about yet. Nio may announce a double shift soon at JAC. JAC is that third-party car manufacturing plant that handles all the car manufacturing for Nio. It's owned by, half by the Chinese Communist Party and half by Volkswagen. I know that sometimes people don't like to hear that, but it is. And right now, JAC, I believe it's still at this point, I don't think this has been announced yet, but right now, or at least for the recent past, JAC has only been operating on a single shift. Tesla's cranking at multiple shifts per day. This really lets Tesla crank more vehicles. But very soon, we're expecting Nio to announce that JOC is on a double shift, if they haven't made that shift already. And that's really going to help Nio ramp faster, getting those production lines moving longer in a day. In April 2021, by the way, and this could be a catalyst here for Nio stopped subsidizing JAC for their losses. So that means Nio is no longer sending money to the manufacturing plant to subsidize their losses. That's good. That's going to help Nio's margins again, especially if we get another shift and no subsidy of losses. And on top of that, China is extending their electric vehicle subsidies through 2022, and I wouldn't be surprised if they keep kicking the can down the road. Countries want to go EV right now. So, right now, we've got a lot of excitement around Nio. A lot of things to be positive about. But something that's also really crazy is Nio's, the battery as a service technology that Elon Musk said Americans just don't want. We're not doing it. Nio, they are seeing an increasing share of their customers going for it. Something known as the take rate, which is the amount of customers that actually do it, was 35%, which is already ridiculously high. And just in the last 30 days since we last heard, it's jumped to 40%. Now, this is going to be interesting if we're talking catalysts for Nio here. In the short term, it's possible that the higher the battery as a service take rate is, the lower Nio's margins look. Reason for that is you don't get as much revenue up front, right? You're getting less revenue up front, but you're getting revenue stretched out over time. And we still got to see what the profitability of this ends up being because, Nio is now taking responsibility for batteries that decay, basically. They'll figure it out. But what's important here to remember is we want to see margin growth. We expect to see margin growth in Nio, and that's going to be a big part of Nio's valuation, which we're going to talk about next. But if we see, some softer margin growth, keep in mind some of that could be because of the BaaS model. We'll see. We'll analyze their next report when it comes out. But this is a little suspicion that I have that could be a potential short-term downside for Nio. Because if Nio starts missing margin, and it's because they're doing so much of this BaaS model where they're not taking in as much revenue up front, it could hurt. Because think about it. You're still spending the same amount of money to manufacture the car, and you're actually still manufacturing the batteries. But now instead of getting paid in a lump sum, you're getting paid over, 5 or 6 years, right? Anyway, let's now do some valuation estimates for Nio. I'm getting too excited about Nio, and sometimes that gets a little sketchy because I don't want to be overly excited about a company, so I always want to look for potential downsides. And the big downsides here are going to be margin. How profitable is that battery as a service business going to be? And keep this in mind, no matter how you slice it, Tesla is a way bigger company. They are way ahead of Nio, way ahead. It's not even close. And so, oftentimes when we're like, oh, what's the next Tesla? Sometimes we just have to remember that Tesla's also potentially the next Tesla. Now, still excited about Nio though. Let's do a little bit of valuation for Nio. Obviously, we'll keep an eye on seeing how Nio grows here, but let's talk here. When Tesla was selling for around $420 per share, Nio was much more expensive relative to Tesla when Nio was at $50 per share. And sometimes people get confused here because they're like, how is $50 more expensive than $420? Just on a valuation basis. We'll talk more about this. Tesla just skyrocketed to like $725 though. So this creates some problems with the valuation because, well, for Tesla, because now Nio and Tesla have roughly the same valuation multiple. That is, they're both expensive, okay? These are both expensive companies. Don't get me wrong. If they miss growth, you're going to see these things plummet. Now, Nio currently sells for about 14 times their 2021 estimated revenue. Tesla also sells for about 14 times their 2021 revenue. Now, both of the companies' revenues, Tesla's is way larger. That's why they have a bigger market cap, right? Tesla's got a market cap of over 700 bill. Nio's at like 80 bill, or it might be like 84 now. But anyway, Nio, of course, because of this, is a little bit riskier, right? Smaller company. We're not sure if they're going to be able to scale yet. Tesla's already been through this path. Tesla's already been at this beginning part of that exponential growth. I still think Tesla on the exponential growth curve is still at the beginning of the exponential growth curve, but Nio's even further at the beginning of the exponential growth curve. And so it's possible that Nio is getting prematurely valued highly because people are like, oh, it's the next Tesla, so let's just pay more for it now. That is a risk factor as well. But if Nio can get to 10,000 vehicles produced on average per quarter in 2021, which might be a stretch. Right now, we're thinking they're only going to do like 7,500 vehicles per quarter. We'll see. We get to the second shift, we start getting to more efficiency. We'll see what the averages end up being. But either way, by the end of 2024, 2025, I expect Nio to produce somewhere around 30,000 vehicles per month on a conservative basis. Tesla at the same time is probably going to be making close to 200,000 vehicles per month. So again, Tesla huge lead here. But if Nio hits these targets, there's no reason Nio stock is not going to be an easy 3 to 4 banger. Okay, now in terms of price target, my Nio price target is buying Nio under $70 per share. That is sort of my buy more heavily target if you're invested in this company for the next 4 to 5 years. I'd be willing to buy this company under $100 a share, but not as heavily. Still a lot of risk in this company. That's obviously what is going to drive this 3 to 4xing once that risk goes away in the marketplace. But again, it also means it could go bankrupt. After all, you're listening to some dude on YouTube. But if you buy this company under $70 per share, and it does by 2025 end up going to $200 a share, that's a 23% return on your money. If you buy it for $100 a share and it doubles, by 2025, the end of 2025, that's about a 14.8% return on your money. So you can see you're obviously incentivized to get into this one earlier, but again, it could also get delisted and go bankrupt, so you've got to be careful anytime you invest in stocks. Those are my price targets. Entirely reasonable if they hit their margins. So very important. Vehicle margin, the most important thing, right next to vehicle deliveries. And also revenue per vehicle. I'm still a little up in the air in terms of how to calculate Nio's revenue per vehicle, because if they're just going to do battery as a service here, it could stretch out how long it takes Nio to 3 to 4x if the market doesn't understand that, whoa, all of a sudden Nio's revenue per vehicle is so much lower, but they're getting that monthly subscription. That's going to be a little bit interesting. And what's the long run implication here? Are people going to, somebody who buys an old Tesla like me, the Tesla Model X, I want a bigger battery, I got to go buy a bigger Tesla. I can't, I might not have to do that with the Nio. I might be able to go from Nio with my 75 kilowatt hour package and go, well, I'll just upgrade the battery. Which I wonder, is that going to cannibalize Nio's potential car sales, or are people going to go, damn, why am I buying a Tesla? I'll just go buy a Nio. At some point in the future, Nio might come to America. We'll see. It's certainly not going to happen under a Trump presidency, but, we'll see what happens here in the next 4 to 8 years. But anyway, we got to be careful. Also, because there is still some delisting risk at Nio. Nio is technically supposed to allow third-party auditors from the PCAOB to actually check their accounting. Now, Nio says they are PCAOB compliant, but they so far have refused auditors to actually look at Nio's books because they say this is proprietary technology, and they don't want these auditors telling, Nio's secrets to Tesla, for example. That's a common fear. And I'm making an example here. And now, we've already seen some Chinese delistings in the last few weeks. We've seen telecoms get delisted. We're thinking we might see oil companies get delisted next. So, some real potential issues here. And if Nio gets delisted, it's going to be in a world of hurt. Now, I think that's less than 3% likely, but it does keep me holding the reins a little tighter on Nio. So, there we have it. If you've appreciated this, consider checking out those courses down below. Get your 4 free stocks. Share this video with somebody you think might find it helpful. A lot of work went into putting this video together. I know it seems like I just babbled for a while here, but everything that I talked about in this video was heavily researched, and I did my best to provide as much value as possible in this. So if you've liked it, hit that like button, share the video, subscribe, and folks, we'll see you in the next video.